Hello everyone, and how are you? I hope everything is fine and everyone is safe. Welcome in a new webinar, weekly analysis webinar. Today is Monday, it's the 26th of August, and I'm happy to be here today. Let's have a look on the markets. What do we expect? Basically, markets during the previous week were having a little bit of, indecision. We have had major moves, but the dollar kept just selling off. We've had continued moves lower on the dollar index. Maybe gold was a little bit, sometimes higher, sometimes lower. What do we have on the economic agenda for this week, and how can we trade the moves ahead? All of this, of course, will be discussed in today's webinar. So thank you very much, everyone, for joining me today. And of course, if you have any questions, you can just leave them in the chat. But just to set your expectations, we always look on the economic agenda to know what are the key risk events that we have in the week ahead. And then we just have a look on the technical analysis and how could we trade? What are the possible scenarios that might happen or evolve during the week? We discuss the major assets like the dollar index, like the gold, euro, maybe the pound versus the dollar, the yen. Sometimes we look at the dollar versus the yen and the pound versus the yen, and of course we also have a brief look on the US indices and the US oil. If you have any other pair that you would like me to discuss or to have a look on during the week, please let me know. Okay, let's start by having a look on the economic agenda. My question is about dollar index. Do you think it may have bottomed on Jackson Hole? Maybe. We will see. Market seems to be bullish. How it will react coming week in cryptocurrency, we will also look at that. Okay, so let's start briefly by having a look on the economic agenda. And today is Monday, the 26th of August, and we can see it's a bank holiday in the United Kingdom, and that's why so far today in the London session we're having some tiny moves. Let's say we don't have those big moves. Is it this weekly time frame? Why do I have the weekly time frame? Okay, on the 1 hour time frame right now we can see brief movements in the markets. Why is that? Because the United Kingdom is having a bank holiday, so lower volatility through the first London session in the week. We have had some business expectations numbers from the Eurozone, specifically from the German economy. However, moving forward, we do have some important data that we need to look at during the day, which will be the durable goods. So we have the durable goods and we have the core durable goods for the month over month for July, and it's expected to go higher. I mean, for the durable goods month over month, we are expecting to see a 4% increase in July. Okay, the previous month was a lot lower, and let's see how this affects the dollar. We do have some key risk events during the week, and we will discuss this. Of course, the CPI, the inflation numbers. Other data, I don't really believe will have a lot of impact on the markets. Okay, moving forward to Tuesday. So far on Monday, yeah, we do have the durable goods that we will be looking at. But other than that, I think it will be a pretty peaceful day to start the week. Okay? Thank you for inviting me. Hopefully, I'll be one of the winners of the $50 giveaway to start trading here. Your name, your email, your account number, and Fathullah Hidayat. I'm sorry. Maybe we will need just, to remove. Yeah, thank you very much. Guys, please don't send your email in the chat. Don't send your email, don't send your account number. If you have anything, you can just contact support. Please leave the chat for the analysis and the questions only. Thank you very much. Okay, moving forward to Tuesday. Tomorrow, we will be having the core CPI from the Japanese economy. It is important. It's really important. Because what we have seen in the markets recently, after raising interest rates by the Bank of Japan, what happened with the yen carry trade and how it affected markets globally, not only in the Japanese markets or the Asian markets, but the yen carry trade actually it caused a lot of sell-off in the markets. So right now we need to know whether Bank of Japan will consider further raising interest rates or tightening monetary policy in the next meetings or not. One of the things that we should follow for that, it's basically the CPI or the inflation. Exactly as we consider, looking at the CPI to know what the Federal Reserve will do regarding interest rates in the United States, we will also look at the CPI from the Japanese economy to know whether Bank of Japan might consider further raising interest rates or we are done for now, because it will further, either appreciate or help in appreciation of the Japanese yen or not. Maybe we might see further sell-offs in the market. So this is really important to note, okay? We do also have the German GDP. That's something that we need to look at. And other than that, CB consumer confidence, it's important. The consumer confidence from the US economy. So tomorrow on Tuesday, I would say the most important things that I'll be looking at should be the consumer confidence from the US economy, slightly expected to edge lower, just a 0.1% or 0.1 point. And the inflation from the Bank of Japan. And I also believe that Tuesday might be another somehow peaceful day in the markets. We don't have a lot of expected volatility. Pound dollar is the highest. The pound is crazy. It's moving just higher, and we'll need to know what will happen during the week when we come down to the pound chart. Will USD durable goods, where is it, influencing to make a downturn? I don't really think, because at the moment we're just looking at the expectations from the next meeting, which is khalas, we will see a rate cut in September. My personal opinion, it will be 25 basis points. I don't really believe it might be any higher. So maybe during this week, you know how the rubber band behaves. If you have a rubber band, okay, and you just stretch it lower, and when you just let it go, it will definitely just rebound to the other side. And I personally believe this what might happen during this week on the dollar, because the dollar during the last week has been just moving lower. Okay, now, after Jackson Hole, we all know that the Federal Reserve will cut interest rates. But from now till the meeting, I might see some, or I would like really to see some retracement and correction on the dollar index. Hopefully, it will be the other way on the pound. So other pound, versus the dollar has been stretched higher. I hope, it will start showing some weakness during this week. What will happen to gold? We will discuss gold shortly. Great to be back, but again, no sound. Okay, do you expect gold to retrace before moving higher? Of course, we'll discuss everything when we come back to the technical analysis. I have a sneaky feeling that the Federal may leave rates unchanged. It's really hard. I think it's, there is no way. Like 0.001% might be something near, what might happen. Okay, on Wednesday, what do we have? We have Federal member Waller, Christopher Waller. He will be having a speech. It's really important. And Eurogroup meetings, we have the Bank of England's man speaking, not so important personally to me. So we will be focusing on the Christopher Waller speech and the crude oil inventories, and that's for Wednesday. Again, maybe it might be another peaceful day. However, moving on to Thursday, now we're gonna see a lot of volatility in the markets. Number one, we have the FOMC member Bostic. He will be having two speeches on Thursday, 2 times, on the same day. Where is it? So he will speak, late throughout the day and also early in the morning. We have some speeches from the Eurozone members or the European Central Bank, German CPI, jobless claims, US GDP. It's really important. We will be having the GDP numbers from the US economy on a quarterly basis for the second quarter. It's expected to go higher from 1.4 to 2.8%. Yeah, this is what might, support the dollar index moving higher a little bit. So yeah, let's see how the GDP goes, because if the GDP is better than the previous quarter was really bad. I mean, the first quarter of the year 2024, it was 1.4%. If it came higher, the expectations are double to 2.8%. I don't really believe it can come 2.8%, maybe a little higher than 1.4, not so much to the 2.8. But anyway, any indications that the US economy is not really as bad as markets are currently pricing in, maybe we can see this retracement on the dollar index higher. So this is what I'll be really looking to follow on Thursday, the GDP on a quarterly basis. And the initial jobless claims slightly, expected only to increase 2,000 claims. 2,000 from 230,000 is pretty much nothing. And the speeches from the pending home sales as well. So yeah, Thursday is a tough day. Thursday is expected to have some volatility. So maybe I do expect this week to be something like the previous week. We started the week really, calm. And as we progressed through the week, volatility just kicked in, ending with Friday and the Jackson Hole symposium. So I think this week would be another one like this, because Monday, Tuesday, and Wednesday, peaceful days on the economic agenda. Moving forward to Thursday, yes, I think volatility will start kicking in here by the GDP from the US economy, and as well as, speeches from the FOMC and the jobless claims. Moving forward to Friday, excuse me. Moving forward to Friday, what do we have here? HPI, Housing Price Index from the pound, not so important. Speeches from the ECB. We have the core and the CPI, I mean the inflation from the Eurozone for the month of August. The unemployment rate as well. We have the PCE, or the inflation from the US economy. And so far, not all of the expectations are shown here on investing.com, and yeah, it will definitely be updated throughout the week. So right now we cannot really predict what will happen for the core PCE index. For example, the previous reading was 2.6, but so far we don't have any expectations. And in case if you still don't know what is the source of those expectations, they are actually from Reuters. So Reuters, they question economists, they ask, they do some surveys, and they have those expectations not so far updated yet on investing.com. Let me see if we can find those expectations anywhere else. Just hang on a minute with me, because it's important, the expectations on Friday for the PCE, core PCE price index. No, it's 0.2. It's still here. And it's not showing. Yeah, it's still not updated. That would be the 30th of August, right? No, it's not shown here. So we will have to, watch this throughout the week, and you can just, access investing.com during the week and check the expectations for the core PCE. Anyway, I personally, let me, put my personal expectations. I would personally expect, PCE to remain the same or slightly edge lower. So for the PCE, the headline PCE from 2.5, maybe a 2.4% would be something I would really like to see. And for the core PCE from 2.6 maybe to 2.5%, or even, you know, staying the same, would be something I'd be happy to see. On a monthly basis, we might see an edge higher, but to how much, you know, what's the extent for that, we will need to wait and see. We also have the GDP. So yes, let's say that, okay, we have also the inflation expectations from Michigan University. So for the 1 year and the 5-year inflation expectations for August will be announced as well on Friday. So Monday, Tuesday, Wednesday, pretty peaceful days. Thursday, volatile day, and Friday is the most volatile day of all. Okay, that's just to sum up the economic agenda for the week ahead. Number one, of course, we will be watching the inflation numbers from the US economy. Number two will be the GDP numbers from the US economy. And generally, I would say we will be having a lot of speeches from the FOMC members. We have Christopher Waller, we have Bostic, and we have others. And also from the ECB members, we have some comments. Please tell us how to enter a trade in the mid part of support and resistance. We should take any trade here or wait to reach the support and resistance. Of course, you should wait. Generally, you know, as a trader, one of the best advices I've actually received in my trading career was from my mentor. That was around 7 years ago. He told me that you should never be proactive in the markets. You should always be reactive. So we do our analysis. You know your resistance zones, lines, you know, supports and resistances, or supply and demand for people who were with us basically in the webinar. If anyone here attended the webinar on Friday, please just leave a comment with one. Just type one. I want to know who actually were with us on the webinar. It was a great webinar. I was so happy to do it. And today we might be doing some supply and demand analysis on the technical analysis. But what I mean is, you should always wait for prices to come to your, you know, levels of interest, and then only you can take trades. But, you know, just following the price, because in between support and resistance, prices can literally do anything. So, yeah. Okay, we do have some people here who attended the supply and demand. That's great. During this week, just a quick update for you, for people who actually attended the supply and demand webinar, I will be planning for the momentum webinar. Again, you asked for it, I'm here to deliver. When will it be? I don't really know, but maybe today is the 26th of August. We always do webinars on Friday, okay? And it will be the same time. But which Friday? Probably, it might be on the 20th or the 27th of September. I haven't yet, you know, confirmed, but maybe on the 20th or the 27th of September, I'll be having another webinar for the momentum to know how we can use momentum with the supply and demand, because both, in my opinion, they are really powerful. Okay, time for technical analysis. Naila Zahra 186, okay. Number of accounts. Should I just keep, you know, removing people or not? Okay, maybe she doesn't know, but please don't type your chats, your emails in the chats, okay? Let's start the technical analysis with the dollar index. Guys, it's important today that we have a look on the monthly candle or the monthly time frame. Why is that? Because during the week, we will, you know, have an end of the monthly candlestick. I mean, Friday will be the 30th of August. So from the next week, we will be having a new monthly candle. So it's always really important to know how the weekly candle will close, okay? Sorry, the monthly candle. I'm talking about the monthly candle. So on the monthly candle on the dollar index, you can see how low this thing went. It's around 3.2% loss on the dollar during the month, okay? Something in me, because let me tell you something. Okay, do you see the support levels that I've just, drawn here? The levels between 101.65 and 101.33. You can see how many times we have tried, closing lower, and we have just respected the support. Many rejections. So on the monthly time frame, maybe that the monthly candle will go higher a little bit to close above the support, because I really find it hard that we break and just close below with this big candle. I mean, yeah, we have been forming the lower wick throughout the previous trading days of the month. But will it really close here, or maybe we can, edge higher a little bit? It will still close bearish. It may still, continue trading lower in the next month and so on. But, for the weekly or the monthly candle to close this bearish, I see it kind of challenging. So on the monthly candle, I have a slight bias that the dollar might be bullish during the last week of this month. Okay, on the weekly, 1 2 3 4, we have already closed below support. We have filled this wick, and the next one will be support around here. So it's bearish. It's 100% bearish on the weekly time frame. But will it continue moving bearish, or maybe this week will have, a bullish close? I'm still on the bullish, side. I don't really believe this can go any lower, because you don't have, reasons for this huge sell-off on the dollar. So I'm sorry, I'll stick with it as being, bullish. Okay, now that's the daily time frame. And on the daily time frame, we need to find supply and demands. So where's the nearest supply zone? In order to find the nearest supply zone, we need an explosive candle, right? So that's an explosive candle. Guys, just stop sending your MT4 accounts in the chat, because believe me, no one cares. Okay, so yeah, that's an explosive candle lower. The dollar index is just, having a series of supply zones, because you can see it's a drop, base, drop, base, drop, base, drop. So I will not be selling the dollar anymore. I'll just be looking for the nearest demand zone. Could this be demand? Yes, this could be demand. And this candle specifically, this is an explosive candle higher. After moving lower, we had roughly 2 candles of base here, and we started moving higher. So yes, this to me is 2 candles, and this is my preferred way of drawing. Sorry. This is my preferred way of drawing this demand zone. And you can see how well actually it's an area of support. We are currently trading inside this level. So during the week, I'll tell you, okay, the dollar index might just start the week and move higher from this level or from this level, because we also have some demand here. We also have demand lower. Again, I'll not be explaining specifically why I'm drawing those demand levels here on those candles and so on, because we have already explained this in the webinar. But anyway, the dollar should move higher, either from the levels of 100.70, which is almost the levels that we are trading around at the moment, or let's say 99.70, roughly. Those are the levels of reversal to me on the dollar during the week. Could we break both levels and just continue lower? Theoretically, it's correct, or it's, you know, it's possible. But, you know, practically, why? Just why? Why will people just keep, you know, selling the dollar? So from those levels right now, 100.70, I will be looking for confirmation price action on the lower time frames. I mean, on the daily and the 8-hour time frame, we are already having, you know, this slight edge higher in momentum. And this is why I always use momentum with the supply and demand, because if you're trading near demand and the momentum is not so strong, you can then say, okay, maybe we will not be breaking this easily. Okay. And on a 4-hour time frame, again, we are having, you know, bullish momentum somehow. Momentum is not able to form lower lows while price is still moving lower. So in this case, what should we do? First of all, you should not touch the dollar with a 10-foot pole unless we have a break of structure. What I mean is, you're now having some, you know, lower lows and lower highs. So if the dollar index decided just to move higher from here, I will not be buying. I will only buy when I have a higher high. So that was the last high, let's say, which is around the levels of 101.50. I will wait. If suddenly the dollar decided, you know, to respect those levels of demand, I will wait for the dollar to move higher, break above the levels of 101.50. Only then I'll be having this reversal or a change of character. And then during the week, I might have my targets higher, you know, to the 103.30. What happens if we didn't break the 101.50? So we might move higher, touch it as, you know, resistance, move lower. So I wouldn't be buying, you know, the dollar unless I have a higher high on a smaller time frame. Maybe the 4-hour or maybe the 1-hour will do it. So this is how you position yourself in the markets. I mean, literally right now, yeah, the dollar is bearish, really bearish. It's too late for me to sell because we are already moving lower. So how you position yourself is that, okay, we are now trading near demand. I will wait. If this demand is really, you know, powerful, it will push prices higher. I will enter a little bit late, but when I'm 100%, you know, after confirmation that we have already seen a higher high. A higher high can never happen, you know, in a downtrend. So something like this will confirm to me that the downtrend is no longer solid and we might see a reversal in prices. Okay. The NFB is currently at 114K, but the forecast is, oh, the NFB is still next week. What momentum indicator are we looking at here? That's the thing. It's not a usual momentum indicator. It's not common and it's not popular out there. It's a mix between two other indicators, Bollinger Bands and Keltner channels. So I don't use the momentum on MACD or RSI or the normal momentum. I have some sort of a specific momentum indicator, which is down here. And that's why it should, because if it's just, you know, RSI or any other thing, I'll tell you, this is my indicator. You can find, you know, tons of content around it, but this specific indicator, it's a mix of both Bollinger Bands and Keltner channels, so you will have to wait for the webinar. Will there be any analysis on gold? Yes, literally right now. Let's check gold right now because I'm bearish on gold, to be honest. Speaking of the dates, does squat witching affect the FX market too? Yes, sometimes it adds, some higher volatility. What's your daily outlook on the euro dollar? We will check the euro dollar after we have a look on gold. Gold, generally, I'm not so happy about it, to be honest. In case if you don't know, let me check if I can get this to you real quick. Wait, just I want to show you something that will be interesting. Okay. Yes, I can get it for you here right now. You cannot see it, right? Wait. I will show it to you because simply this is something that you must see. Display capture. No, not this one, not this one, not this one. Is it this one? This one? Yep, it's this one. Okay, now I'm not. Okay, here we go. I just used ChatGPT. What is the best month to buy gold seasonally? Okay, because all of the higher highs and the upward moves on gold, technically to me it has no reason. Don't tell me as inflation, as whatever it's happening, I don't see a reason for it. But seasonally, the best month to buy gold is actually August and sometimes September. And this is pure ChatGPT. It can do everything for you. So it says, okay, the seasonally, the best time to buy gold tends to be in late summer and early fall. Okay, for a lot of reasons. So to me, okay, without going in more details, but to me, I'm not looking to buy gold anymore because the highs that we are seeing right now is for seasonal factors only. By the end, I really believe that when this is done, we will register a new all-time high and we will have a hard time exceeding that in the short term. What I mean is, let's have a look maybe on the monthly time frame. Where is it? Trend line, is it this one? Can you see if we have reached this or not? Not yet. Okay. On the monthly time frame, the current candle, by the way, it's bullish, okay, because it's a higher high and a higher low. But to me, it's not really so bullish because this lower wick was higher or longer than it should be. So on the weekly time frame, what you can see immediately is we have a bearish divergence on the weekly time frame. So all of this higher move on gold, I don't really believe it could be sustained during the next future. Okay. I'm just not looking, to buy. I'm not looking to buy. I'm just looking to sell, especially that I'm a little bit bullish on the dollar. There is no reason I should buy this, Every high is a little bit higher than the previous one. A little bit higher. It's not so much higher. So this overall, guys, there is a difference between a strong trend and a weak trend, okay? This is a strong trend. I think I've explained this a lot before. This is an uptrend, but this is a weak one. What's the difference between a strong trend and a weak trend? A strong trend like this one, you have small retracements And even the retracements, they don't actually interfere in the price zone of each other, right? But a weak trend is something that you are seeing here. You have many retracements, and the retracements actually interfere with each other in the price zone or the price territory. This is how you know. And for some guys here who sometimes use elite waves, that's the diagonal form or the diagonal wave in elite waves, which either comes in the first wave of the move before gaining momentum, so the trend starts weak, okay, or it comes at the wave number 5 because the trend ends weak. It never comes in the middle of the trend. What I mean is, maybe that was the beginning of the weak trend, okay? It gained momentum here, but now we're losing momentum in the uptrend. And if any guys, you know, here know what I'm talking about, elitician or elite wave wise, you can just leave it in the comments. When you say in the future, what roughly time frame would you say? I would say maybe this week or starting from the next month. I believe August was the best we can get on gold prices yeah, guys, today I'm talking a little bit on a longer time frame because we are not only a new week, but we are closing the monthly candle this week. Okay, so I probably think it's September. Maybe we will be testing the high again, and we will no longer continue higher. That's my just 2 cents on it. Okay, I'll tell you something. You see this upward move here? That's a move higher, and then a sideways move. And then we can move again higher like this. So it will be a flag pattern, and this might be one of the last we can see on gold. So on gold, basically, no matter what they say, Israel attack on Hezbollah in Lebanon, so gold price rises. I don't think this will happen. The tensions in the Middle East, with all my respect, 100% staged. 100% staged, okay? And markets know that anyway. So technically, I don't have any reason to buy gold. Guys, we are having this huge downward move on momentum. So as long as gold is moving higher, I'll just be watching, okay? I will actually be selling gold when I see a lower low. So as long as we're creating those, higher highs and so on, slightly higher highs, okay, that's good. But I will wait for this to end. And the thing is, it's really hard to tell you when actually it will end because we are trading near all-time highs. But let's try to do something out of this. Does it make sense a little bit? Maybe. If you can just, Okay. If you want to buy gold, I'll tell you something. If you want to buy gold, you have your targets around 25.26, which is a really near target, and 25.55 at the best. If you want to buy, but it would be risky because you're just, at the end of this huge move. Personally, I'll be waiting, to short, and I'm not short unless I see a lower low. So guys, my conditions for the week. It might be one of the weeks that I don't basically trade, and it's fine. Not every move we can trade. But personally, I am waiting on the dollar for a higher high on a week time frame or a small time frame like the 1 hour or the 4 hour. Once I see a higher high on the dollar, I'm bullish dollar. Once I see a lower low on gold, I'm definitely selling. But I am not recommending that the current trends will actually continue. Fair enough. So during the week, if you see a sudden sell-off on gold and a sudden, move higher on dollar, just remember that I told you so. Just remember that I'm waiting for this. But I know, okay, the trend is your friend unless it's no longer your friend. The trend has been our friend for a long time on gold. Is it right now that we will just think about, befriending the trend? No, I'll just, cut off relations with the trend at the moment. Let's have a look on the other currencies. Okay, guys, because the dollar has been quite moving the markets during the previous week and the previous whole month, let's say. So my analysis on the euro, on the pound, on most of the currencies will be pretty much the same. So on the euro, yes, we are heading higher. Do I really believe this will continue higher? No. So what I'll be looking for is, oh, that's a great supply zone on the daily time frame. You see this huge upward move and the huge move lower. We are almost around to, we are close to tap into this. Okay, let's zoom in. Let's apply what we have learned in the previous webinar. Where is my leg out? My leg out should be an explosive candle. So I would say this is an explosive candle here. This one. That's a great selling candle. Okay. So this, how can I? Yeah, this is my leg out. Where is my leg in? Huge upward moves. This is my leg in and this is my leg out. I'm left with the base. 1, 2, 3, 4 candles. How can I draw my supply zone? This is my preferred version. From the lowest body in the supply to the highest. So the lower one, can I write text here? It's not, no. The lower one should be the proximal line around 1.12 and the higher one should be my distal line 1.1278 roughly. So we are talking about the 75 pip zone on the daily time frame. It's not so much. If you want to work with the wide version, here you are. It's now 100 pips zone. Anyway, I don't work with the white. I will be working with the preferred version. Okay. Something is wrong with TradingView today. So extend this till the future. Where are we at the moment? We are so close. We are almost touching this level right now, by the way. We are almost touching this level. So will I actually short the euro during this week? Maybe, but not now. Not because I don't work with pending orders. However, if you want to short the euro, that's your entry. The stop loss, as we said, should be higher than the distal line. So we're having a little bit, of maybe 100 pips stop loss, right? And I believe the target should be maybe at least 1.0965, something around here. So we are having a little bit more than 2.1 or 2 to 1 risk to reward ratio. Okay, if you decide to enter this trade now, what I will personally do, I wouldn't do it right now because momentum recently is not, yeah, it's weak generally, but it's not so weak. So maybe we will tap into this supply zone first, spend some time here, and then move lower. So in this case, we will move to the lower time frame. On the 8-hour time frame, yeah, this definitely has some room to move higher. Maybe I'll be working to short around 1.1250 to get a better price. And if you want extra confirmation, what should you do? You should maybe move to the 1 hour or the 4-hour time frame and wait for a lower low to form. So yeah, as long as we're creating higher highs and higher lows, don't short. When we create a lower low, this should be your entry signal. Guys, what I'm doing here is I'm not trying to give you a clear direction. maybe just euro will shoot higher. I'm just telling you to be 100% prepared. On the euro, we have supply zone on the daily time frame. On the dollar, we have a demand zone. So generally, this is the directions I'm looking to trade during the week, maybe, if the markets give me the chance or the opportunities. What are the chances or the opportunities? I've explained this to you. I will be waiting for lower lows to form on the euro versus the dollar and gold. But be aware that the euro might see some downward moves during the week. Please tell me that you have got this. Please tell me that what I've explained so far on the euro actually makes sense. That's the 8 and that should be the 1. Amazing. Entered. We seek a confirmation. Wait. We seek a confirmation from lower time frame, maybe? Yes, 100%. Because if you have the general idea or the general, bias from the longer time frame and you just enter, okay, it's good. But how about, refining your entry on the lower and lower time frame? You will get a better price. With the same stop loss that you had on the daily time frame, you will get a perfect risk to reward ratio. Guys, I cannot even tell you that if this is the daily time frame on the euro, and yes, this is the supply zone, right? If you just short from here, let's say I just entered my short position here, my stop loss is maybe around 120 pips, and let's say this is my target, okay? So it's around 2.3 to 1 reward to risk ratio. How about if we can just get a better price from lower time frames? You can see this can easily get you 5 or even 6 to 1 risk to reward ratio. So you can either choose this type or, stick around for the 6 to 1 risk to reward ratio, or you can just, enter and exit early. You have your 2 or 3 R's and you're out. So of course, refining your entry price gives you a better advantage in the markets, and this is how you do it on the lower time frames. Makes sense. What is the safe standard for using the RR? I never enter a trade unless I have at least 2 to 1 RR. Okay, the more the better, but I don't, 1 to 1 or 1 to 1.5, just to me doesn't make sense. Okay, I think, let me check the pounds if we have any supply zones. On the daily, we have definitely just, moved higher above this one. Can we get back? Maybe we can check the weekly. It would be more. Yeah, guys, okay. Okay. This one here, on a smaller time frame, it might seem like a supply zone, but on the weekly, we don't actually have a base. We have a leg in and a leg out, right? But here, the current prices that we are actually trading at, can you see what's going on here? We can see a leg in, a base, and a leg out. Let's draw this zone. Now, this one here is a decisive or maybe an explosive candle. This one definitely a decisive or also an explosive, and this one also. So this is a clear leg out, right? And this is a weekly time frame. So 3 following weeks or even 4 weeks, the pound lost almost 6%. Don't try to convince me that this is normal trading. This is definitely some sort of supply here. So we have a drop, base, drop. How about we draw the base? This is the preferred version, is it? Yeah, this one. This is the preferred version. How many pips? It's a lot, because the pound on a weekly time frame, it's a lot. It's almost 250 pips. And currently, okay, wait. It's not a fresh zone. So this one here, we tapped into the supply, and the unfilled orders actually got filled here, some of them, and we are back again. We are back again. This is not a fresh supply zone. It's fresh on the euro, right? It's fresh on the euro. It hasn't been touched. But the pound, okay, I wouldn't say this is now a supply zone, because a supply zone, as we said, it should be somehow, it should indicate to you that there are some unfilled orders. So this one here, the supply zone was formed, it was tapped into here, and we definitely just went lower. And if you actually traded with the supply and demand back here, you could have just shorted, you know, the pound from here, just stops above, and, you know, easy 2.2 risk to reward ratio, just targeting the previous low. And this is what I'm trying, you know, to achieve on the euro. But as long as we have reached this already on the pound, so it's no longer a fresh zone, I wouldn't say it's a supply zone. If I'm gonna trade this, because I'm bullish on the dollar, I'm bullish on the dollar, I'm bearish on the euro. So the pound must follow somehow, because the dollar moves the euro and the pound. So even if I'm bearish on the pound from here, I'm bearish because the dollar should go up. I'm not bearish because it's a supply zone. So yeah. But generally, you know, I don't like the pound. I would prefer waiting for the euro instead. But still, on the 1 hour time frame, if we see a lower low, it's a definite short. But I don't think this might happen, okay? The pound dollar will continue buying, maybe. I mean, it's not so good like the euro versus the dollar, okay? Okay, what else do we need to discuss? What else? Let's check the indices. Yeah, Nasdaq. I'm bearish Nasdaq. I don't really believe. Yeah, you're asking for Nasdaq. Okay. On the weekly, the selling that happened at the beginning in July and August, because of, you know, the tech, AI and everything, I don't really see the Nasdaq higher so much. Okay, there is definitely a supply zone here, 100% supply zone. But let me ask you a question for people who want to really learn supply and demand. Is it a rally based drop? So is it a rally based drop, or is it a drop based drop? Anyway, it won't matter because they are both supply, but it will matter for you in actually drawing the zone. So would you say what's happening here, is it a rally based drop or a drop based drop? Drop based drop. So yeah, to be honest, I'm more leaning on this because I can see a clear leg in. We have a base and we have the leg out. But if we say a rally, what is the base for the drop? I cannot say this candle could be any part of the base whatsoever. So I would really prefer it's a drop based drop. So in this case, we will actually need to draw our zone. Here we go. That's the preferred version. We do have here a drop based drop, but it's not fresh. So that's an explosive candle. That what's happened in July. I would say those are base candles. It's not fresh anyway. We tapped into this. We continued moving lower. So as long as this is not fresh, I wouldn't really say I'm expecting a move lower from here. So during the week, maybe Nasdaq will be edging higher from 19,750 maybe to 2,000. Let's say 2,000 would be good. But from here, get ready to sell Nasdaq during September, maybe, yeah, because this week I'm a little bit bullish. We must move higher to tap into the supply. This is definitely a supply zone. This here, definitely a supply. Definitely people were left here willing to sell and they couldn't catch the orders. So we are definitely having some unfilled orders here, and we are definitely going higher to test the Nasdaq and move lower. So this is one of the few cases, you know, because guys, I'm at the end of the day, I'm a realistic analyst. Sometimes I say I don't know. Sometimes I'll tell you, okay, market can do whatever it does. But sometimes I'll tell you, okay, this is what's going to happen. And this is one of the times that I'm telling you, Nasdaq will go higher. Inshallah, it will tap to the levels of 20,300. Just, you know, fill in those supply orders or selling orders and move lower. Okay, gold will still push up. Can we saw gold soaring higher this week? Yes, you can see it, but not a high probability scenario. Okay, you're positive correlation, so it makes sense. Yeah, that's why I'm telling you I'm bearish on the pound, only because I'm bearish on the euro, not because the pound is actually looks bearish. I'm a little curious about pound yen. Okay, no problem. You ask for it, I can help you with it. What's this? That's the weekly time frame. That's the weekly time frame. Okay, on a weekly time frame, we have support formed here. We have resistance formed here. So it's basically moving in a sideways range. It's pretty much, you know, yeah, I'm bearish. I'm bearish on the pound yen. I am bearish. Why is that? For many reasons. Okay, here we go. That's one of the really bad scenarios. We have a drop, base drop, slight supply here. This is an explosive candle after 2, maybe 3 candles of base here. So there's my supply zone. I would say it's really tight if I work with the preferred version. And it didn't really touch. Why? Because I'm working with the preferred version. If you work with the wide version, yes, it touched and it's moving lower. So there is some sort of supply on the pound versus the Japanese yen. And the overall move higher, if you can remember, we said that this is a weak price action. It's not actually in reversal. So it's just, you know, a correction. We touched this high twice. So we had a high here. We touched it again. There is no just, you know, bullish power on the pound versus the Japanese yen. And personally, for me, during the week, I'll again wait for a lower low. So that's my last low, around the levels of 189.23. I will just wait for a close lower, and I will sell the pound versus the Japanese yen. Let's say 189. Just, you know, I'm sorry, what's that? 189, okay. And that should be my entry. On the pound yen, I'm waiting for a break below 189, and I will short the pound versus the Japanese yen, okay. Oil is doing nothing, pretty much nothing. Is it a price channel here? Yeah, maybe, somehow. Yeah, we are expecting, you know, pretty much easy. We are trading near the midline at the moment of the price channel. So a move lower is definitely expected, especially after this great move higher with almost no retracements. So by the beginning of the week, we might see oil edge a little bit lower before, you know, just a correction and move to gain momentum and to continue higher. We are generally trading, we can say it's a price channel. We can say it's generally, you know, a sideways trend between a support and resistance, and that's that. Okay, do we still have any questions left? The dollar yen, generally I wouldn't touch the dollar yen because I'm bullish on the dollar, but generally the yen pairs are not so good at the moment. So yeah, maybe we'll move lower. That's good demand here. Yeah, no, I wouldn't really comment on the dollar yen at the moment. Please give an idea on entry candles and exit candles. Believe me, it's a big topic. So yeah, maybe it will be one of the webinars that we can do soon. How to determine confirmation of reversal candles and what's a good RR ratio. A good RR ratio is anything higher than 2 to 1, in my personal opinion. It also depends on your strategy, because if you have a good strategy with a high win rate ratio, I mean, if you enter 10 trades, you win 8 out of 10 trades, this is a very good win to rate ratio or win to lose ratio. So only then you can decrease your RR a little bit. Maybe 1 to 1 should be fine. So you should actually consider both the win rate ratio and the RR. But to me personally, I look for at least 2 to 1. Because I don't want to be 100% correct every time in the markets. I just want to be correct 5 times out of 10. With a 2 RR, I'll be profitable in the markets. And this is how I like to play it. Okay. Israel attack on Hezbollah in London. This is an old question. Okay, guys, I think we'll have to conclude this here. No more questions so far. Do you have any questions? Maybe we can give you 1 minute. Okay. Any questions more? No questions. Okay, that's really good. Thank you very much for watching this, and I'll meet you again during the next week on Monday. How many minutes ago this session starts? Now we are running almost 1 hour, and this is, I think, the longest. Okay, I'll meet you on Monday for the weekly live analysis webinar, and during this week, please make sure that you follow your email, because we'll be sending you a notification with the next webinar, the educational webinar. Maybe it will be the 20th of September. It will be about the momentum. So keep an eye for it. I want you to register because I don't want you to miss out how to, mix between the supply and demand and the momentum. Thank you so much, guys, for attending this. I really hope that you have a very profitable week. Please trade safe and please stay safe. Goodbye.